Once upon a time in the heart of Europe there was a hard-working woman slaving herself every day to save money during the Great Depression. She was spending countless hours working, supporting her family with the hope of providing her descendants with a better life. And then came her great-grandson. Thinking he would be a hero, he saw an opportunity to get rich quick. He believed he was so good at day trading that he increased his leverage to 50x. Traded while high, but all it took him was just 5 months to blow it all into dust. And it is my honor to present to a trader who goes by the name of that generic guy Zero, as he made a 30k loss funded by his great-grandmother's inheritance. He mostly lost that money on Bitcoin, but the worst part of all this is that he's bullish long-term on Bitcoin. And the whole point of all this was that he wanted to get even more capital from trading it, only to invest it back into Bitcoin long-term. Now, one of the funnier parts is that he's a business student turning 20 this year, and this money was a part of his great-grandmother's inheritance that he was trusted with to use for safe investments like real estate, which he thinks is debatable but definitely leagues safer than cryptocurrency derivatives. But since he had started his journey of discovery of day trading, definitely not gambling, in 2018, and knew about the massive profit potential, ignoring the downside of course, he could make with this financial opportunity, he decided that after several years of being out of the market, not even paper trading during that time, although he supposedly had a profitable strategy at one time for like 2 months in 2020, but then shortly thereafter he lost a lot of his own money, or like 2k, he was like, let's go for a funded futures account. So yeah, he started day trading when he was about 15 or 16, although it was mostly on sim accounts, but in those 4 or 5 years he was profitable for just 2 months, and he still decided to start trading one of the most leveraged instruments in the market. I guess that's just one of those special decision making skills they teach you in business school. So like any village idiot, he decided it would be a brilliant idea to start shorting Bitcoin at $38,000 in November 2023, because it always retraces to the bull market support band before the halving. Right? Except this cycle of course was different. On a side note, he thinks it can still happen, and it probably will, just as an extra you to him, but he's all out of dinero now. Anyway, he started small with increments of a couple €100 here, 1 grand there from his checking account, while being leveraged to the tits of course, and rarely going under 10 to 20x leverage. But it's important to note that this was still his own money that he worked for to make at this point, not the hard-earned euros his poor grandparents slaved every day to save for during the Great Depression. But then the key turning point of escalating was when he decided, let's withdraw 5k from the savings account with my inheritance. And after a couple of successful trades, he added another 10k for a total funding of 15k. He was very successful, managing to close out a trade on his best day and topping out at 21 grand. But after that he started losing, using more and more leverage, eventually reaching the maximum full legal leverage limit of 50x that Kraken offered him. That means that with just $1,000 he could trade $50,000 worth of futures. Definitely a great idea when he's one of the most successful and genius traders out there with an unbeatable track record. He was even up by more than 10k on a single trade before the losing period, but no, he did not close it in the green. Yes, he did screenshot it at 8k, and yes, again, he's fully aware of how regarded he is. And as you can see, he was using very advanced technical analysis that would take decades of rigorous studying to understand. And for anyone thinking all this is fake, here is the transfer history between him and Payward Ltd, a Coinbase's company he used to buy crypto with before sending it over to his Kraken futures account, because they allow the most leverage in his region, but in turn he probably paid hundreds in transaction fees. So he was outright specifically looking for the riskiest thing to trade. And here are additional charges he made on his debit card because he was in a gambling pit of despair and needed to quickly get it all back. Now you'd think he'd stop there, but no, never enough. He was the new Jim Simmons, the man who solved the market, and he just had a bout of some bad luck. Definitely not because of his terrible risk and emotional management with a complete lack of consistently profitable strategy. And then the inevitable despair began. He just kept losing. Whenever he would flip his short bias, he would get f***ed. Whenever he would flip back, he'd get f***ed. Now, most people at this point would take this as a divine sign from the universe to just stop trading, but no. The sunk cost fallacy was in full effect at this time, something that he thought would never apply to him because he's so wickedly Jim Simmons level of smart, of course, to the point that he can't even spell his name correctly. So he added 10k as a last hurrah. Now what do you think happened? Well, of course he got absolutely and almost instantly on the side note, the ETFs were approved around this time and he was trying to sell the news. Then he kept doing this with smaller and smaller amounts over longer time periods until that savings account finally ran dry and he inevitably accepted his regarded fate. If instead he had just simply bought Bitcoin on spot at 38k with the full inheritance when he first started trading, which is looking back still not a reasonable risk level, he would have made nearly 25k in profit by now within 5 months, or more than 83% of his initial investment. An excellent return by any metric. So what are the lessons he learned? Now obviously he's not in any position to be giving trading lessons, but these are just notes to himself and people like him from which we can actually learn a lot about the type of person he is and how he was trading. Firstly, don't day trade crypto, no matter who you are or what you think you know. It's not a good idea, ever. Secondly, and this should come as a no-brainer, but don't trade when you're high or intoxicated in any way. Now the next one depends on what kind of a person you are, but don't install the mobile app version of your exchange, because this definitely facilitated some of his poor intoxicated financial decisions. Also, when you're so goddamn high trading that you can quite literally hear your late ancestors shouting at you to stop what you're doing even when you're winning, which yes is quite eerie, maybe listen to them. Don't trade anything without a profitable strategy and a system that you have heavily backtested for that asset, and obviously don't trade money that isn't fully okay to lose. Surprisingly, he did tell his family about all this and they are not happy with him. Obviously this has degraded the trust they have in him for all financial matters, but you know it's a great thing then that he's studying business. Also, don't trade when emotional. Good or bad emotions doesn't matter. If you're emotional in any significant way, you're most definitely gambling. It should be boring. Losing money so stupidly that you have not even worked for, hence you don't even know the true value of, really sucks and should be very much avoided. Besides the moral implications of what he did, he also thinks about all the fun things he could have wasted that money on instead. It could have afforded him years of pure relentless fun, but instead of using it wisely or having fun, he chose to rot in front of a screen looking at a bicolored line go up and down for several months. But at least he had somewhat noble intentions, as the main end goal of using some of the capital he generated or borrowing against the Bitcoin he would have bought with it through this misguided ventures, so to speak, was in assisting his family in purchasing a new apartment. He wanted to be the hero's son, someone his parents could with great pride show off to their friends and the rest of the family. So young and owning majority equity in a piece of real estate. A stupid hero complex fantasy he so stubbornly chased. But that's partially why his parents actually justified the decision of not throwing him to the curb. Now the funny part is that although he has stopped trading, he's taking a long break, as you can imagine, but he will be returning to paper trading at some point and will stick with that for a long while because he doesn't think his paper-handed trades were purely coincidental luck. And here comes the funniest part of the story. He actually still believes he has an edge, but he just hasn't quite figured out what it is quite yet. He's definitely not going to be investing anywhere near this much of his net worth into anything trading related ever again though, but I have a strong feeling that this last part is going to change. And if you want to see how this trader turned just $3,000 into $300,000 in a month, click on the video just popped up. If you like my content, make sure to subscribe, and if you have any questions or recommendations, leave in the comments below, and thanks for watching.